All right, guys, what's going on? I just wanted to take you guys through the process that I went through here recently. I had passed a couple combines and I had gotten a copy trade payout. I had gotten two 50K Express XFA accounts through TopStep. I passed a couple combines. I don't normally record the combines because I try to get through those as quick as I can, but I took this account from $0 to about a $2,600 payout. And the video is long, but I think there's some value in there and I hope you enjoy. Alright, so this first trade, it goes really quick. I kind of got the end of it, so we're going to double it up here. We're going to watch it twice. So you can see that I entered up there at the retest, which is inside of a fair value gap and a volume shelf. You can see on the right, on the volume profile, where those volume bars stick out. Right there, we get filled for about $1,000 on that day. And we're gonna go ahead and replay the trade, but you can see on the right there's a volume shelf, and we're kind of inside of this fair value gap up there. We're inside of a fair value gap with volume. That's the most important thing. If a fair value gap doesn't have volume, it doesn't really mean a whole lot to me because I'm trading volume and price. Super easy trade, very happy with that. It can't get any better than that. Alright, so there wasn't a whole lot to say about that first trade because it just went so fast. And I didn't catch the record on the whole thing. But that's just how it goes sometimes. Sometimes there's some luck involved as well. So on this trade, you can see that what I was thinking is that we came down and we broke back up in above this little support, which is this little gray line. And we had a doji candle right there, and we had some decent buy volume, and we have a MACD crossing in our favor. But you can see every time we come up into this fair value gap on the left, which is that big long red candle, the candles create these wicks, meaning the sellers are just hammering it. They're just pushing it down. And you can see to the right of that dashed gray line, there's a volume shelf over there on the volume profile, meaning that it's just a level of supply. It's just a level where sellers want to sell it. And I start to see that, so I just trail in my stop. I take a small loss there of $342. Because it was just kind of the opposite trade, you know? It's the opposite trade of my strategy, so I covered the risk and took it off. So I flip the bias, I go short, because I can see that the sellers want it. These are lower highs, and you can see here in a second that right there, you can see the sell volume picking up right there at the bottom. You can see on the volume bars, bam, look at that sell volume coming in. The shorts are just hitting that thing. You can see over to the right, the time and sales. Those are all short orders. Those are sell orders, over 10 contracts. But you can see there is some buyers there, because we are kind of around an even number. It's 23,150, I believe. Usually these round numbers get bought up or sold on the NQ. Usually the zeros, the 20s, the 50s, and the 80s will be reactions to those prices if there has been a reaction to that area in the past or recently. We come up in here to the same level, we add another contract, which we really shouldn't have done. We really shouldn't. It's over leveraged. I should not have over leveraged right there. But I had this confidence that I was on the right side of the trade, which that can get you hurt. That's where trading psychology comes in. And if you're not too partial, if you're not willing to sway one way or the other, and you're so convinced that it's got to do this one thing, that's how you blow accounts. I've blown many accounts like that. But you can see right there, the buyers pick it up. You can see that green candle that came in, along with this green volume bar at the bottom. The MACD's crossing up on the 5-minute and the 1-minute time frame. But you can see we get a push right there. We get a push from the sellers. And I remember I had been in this trade for quite a while at this point. You can see my hand on the close button right there, and this is where some of the psychology comes in, where, you know, you just try to realize you're on the right side. I thought maybe a double bottom was coming in here. But you can see that in the volume at the bottom, that the buyers are just not, they're just not taking it. We got that trade for $876 profit on that day, so we didn't do too bad on that day. Alright, day 3. Now, what we were doing here, because the market has been chopping a whole lot lately, it's just been going to a support level, going back up to a resistance. We were just taking a support long. That's it. I saw the volume come in. I saw the MACD crossing in my favor. I didn't want to wait to get in this because I knew that it probably didn't have a whole lot. Right there, you can see the reaction of the buyers. You can see it wicking. It's getting bought up right out of there, and boom, big candle. But it's not a ton of volume, which is an indication that it's going to be rangy. Just going to go like bounce back and forth between one price and another like ping pong. And it's just got a smooth staircase up right there. And these are the kind of trades that you just kind of want to sit in until it makes a lower low. You can see right there we get the profit for about $1,000 on the day. Really clean trade. I was really happy with that one because it just turned right around on this, as it usually does on a range day. But yeah, happy with that one. Alright, day 4 was not the best day, but it wasn't the worst day either. I go ahead and I try to take a breakout short there, and I got pretty much immediately stopped for $597. We try to enter again, which was a bad idea. We add right there, which was an even worse idea. And this is just what happens sometimes. It was one of those days where I thought, oh, the market has to go down. It's about to break this level. I saw Nvidia and Apple trending down, but that doesn't always mean that the NASDAQ or NQ futures is going to end up trending down. And I start to see some buy volume come in here. You can see the candle down there, the little green candle. And then right there, big buy volume. So I go ahead and I take the loss. I'm down now $1,200, but I have just seen an entry model that I use that has a very high success rate. So I go ahead and jump in, and this would have been my last trade for the day, and it would have put my account in a really sketchy spot. So you can see this big buy volume came in right down there, that big green bar, and it broke through a level. Like if you look to the left, that was a fair value gap, or it broke into that level. And now the last level that we need to break is just above that high where that long fair value gap was created, because there will be a lot of stop losses there. And you can see that we're just slowly grinding through it right now, and we're creating this nice uptrend. It's a very pretty nice uptrend. But as time goes on, we keep creating it. We just keep riding this trend, and I just keep riding the trend right now. The only bad thing is I was down $1,200. So this is a lesson that if you take bad trades on the way to your good trades, it kind of screws everything up. We break the trend line, and I close the trade. I should have ended the day right there on break even, but I was trying to get the profit. I was trying to trade my P&L, not the chart, and I just shoot myself in the foot from it. I mean, not terrible. It's really not terrible, but it's just not as, should have just walked away when it was break even. You got to know when to just capitulate and let the market win. And now we do break through the trend line, and we take a loss there for $600. We enter again, thinking that this is going to be a higher low because there's big buy volume adding. We get in a little bit of profit right here, but there's still sellers present. And you can see what's happening. Usually when it trends up like that, it will consolidate, or it will move sideways for a little while and either continue up or come back down. And it's just kind of switching hands, meaning that the people that were initially long are closing their trades and other people are getting long, or the people that were long are closing their trades and some people are getting short. And the way you know if it's going to continue up is if you get a break through the top of the consolidation, which would be around that blue line up there, a big break on big volume with an engulfing candle with the candle body straight through it. But I had been trading for a while on this day actually, and I don't always have the longest amount of time to trade. I can't actually just sit here all day some days. And you can see right there, the sellers they're still there. They're still just hammering it, and it could not necessarily even be shorts. It could just be people that were long at the bottom like I was, and they're taking profit. And this day right here just goes to show, I mean, this is textbook psychology. Like, you know, at the first of the day, I wasn't partial. I thought, oh, this has to break through this support down here, and it has to go down. It just has to, because Nvidia's going down, Apple's going down, you know, all the tech stocks are going down. But it's just not always how it works like that. I mean, you're not there to trade Nvidia, you're there to trade the NQ. And look at that big red candle on the sell volume, meaning the sellers are still present right there. And we're getting into a little bit of profit here, around $400 profit. And it's creating a nice little uptrend, but you can see the sellers are still present. They're still there. And at this time, at the bottom, I can see it's around 9:30 my time, which is usually my time that I have to quit trading. And I can see right there, the sellers are still hitting it. There's big sell volume. I think about trailing my stop in, but then I see this start to happen here. And I end up just taking this off for like a break-even trade, and we just make pretty much a break-even day for the day. All right, day 5. And a minute ago, I said that was a break-even day. That was just a break-even trade. For that day, I ended up going negative $857. So it's not the worst day for me, but definitely not the best. Usually my winning days are between $500 and $1,500, and then there'll be some small days that are about $200, especially around my payout day. I usually just try and take my winning day and get out of there. But you can see here on this day, day 5, we're taking a short, and you can see that the buy volume is low, and I thought that it was just going to come into this area and pull back down because it is in a little downtrend here. You can see right here the buyers are pushing it through, and it's not on, right there. The big buy volume comes in at the bottom. You can see it come in, meaning the buyers really want this now. So this is now, that was a lower or a higher low that we had shorted into. So we flip our bias. We buy 2 contracts here because I can see on the lower time frame that it has created a higher high, a higher low, a higher high, and a higher low. It's created a clear trend. There are some sellers still present, as you can see at the sell volume that's coming in, but the buyers are more consistent. They're more repetitive. They're coming in, not in these big droves, but they're slowly attacking the price. They're slowly eating away at the sell orders, just chipping away, over and over. And that will create a price action like this, where price action just slowly trends up because the buyers are willing to buy it slowly, but consistently, and they're willing to buy it at higher and higher and higher prices. Even if a big sell order does come in, it doesn't necessarily mean that it will come down, because the other sellers have to follow that seller in with the large sell order. If just one seller comes in, it's just going to create one large sell candle, kind of like that right there. But the sellers need to follow them in. And that might not even be shorts. That could just be someone taking profits that bought a lot of contracts near the bottom of this range. Or they could have bought, 2 days ago. We don't really know. We can just go off of what's happening in the moment right now. And I like to draw these little trend lines because I don't really trade off of them necessarily. Sometimes I do, but not a whole lot. But it just shows me, it's an indication that price is in an uptrend. And it lets me know that until we break this trend line with convincing volume, that the trend is still intact and I'm still on the right side of the trade. And I like to have a more intense angle, like a higher angle on the trend line, because these trend lines like this that are at a less intense angle can sometimes be bear flags. So you have to watch out for that. We can see the buyers are just slowly buying it here. I'm trying to get it up into that level where I'm putting my sell order at. I did take a trade after this. That was a small trade for about $150 profit. So that helped add to this day just a little bit, because I am down $390 at this point because of that first trade that I took. But I did take the risk off pretty quickly once I knew I was on the wrong side of the trade, which is always a good idea. If you're on the wrong side of the trade, you don't want to hang out in there. You don't want to hold and hope, But on this one, we go ahead and take a break-even trade. And for that day, we were about negative $200. All right, day 6. After 2 losing days, we lost about $850 one day and about $250 the other day. Right around market open, we get this nice breakout trade with a higher low retest. And this is a pretty quick trade. We get this higher low retest. I could see that buyers were in control because of the wicks. You can also see over the right the time and sales. All those buy orders that are coming in, over 10 contracts. I mean, the buyers were just hitting this thing. And you could see that right around market open. And I don't always like to do that, to just jump in near market open. But this was just one of those days where I could tell the buyers were in control. Obviously there is some discretion in day trading, but for me it's just all about the volume. That just shows where price is going to go and where people want it, and it's just supply and demand 101. But I mean, this is a perfect trade. You can see the retest right where my order is, that green line. It retests in that fair value gap, and the buyers just hang on to it. They don't let it go, and they just keep buying it. Even right now, they're still hitting it. So we go ahead and we take this trade off here soon, because I saw Nvidia turning around. We take it off, and we take it off for about $700 on the day. Very good day, very happy with that, no complaints. Alright, day 7. So this would be my payout day. And what I do on my payout days is I just try to take my $200 winning day and just take it and leave it. Because to me, the difference between making $200 and 500 or 1,000, whichever, the extra risk is not worth it because you're risking to make a few $100s more, and you're risking the entire payout. So my goal here is to just take a win and leave. And they've now changed it to $150. It was 200. I'm still going to try and take 200 because I'm trading one mini. Anyways, we go ahead and we take a long right here at the bottom of this range because again the market has been choppy. We get some volume to follow through. It's not a ton of volume. We get into a little bit of profit of around $300 here, but you can see on the left there's a big red fair value gap, meaning that sellers wanted this before. So there's going to be some sellers in that area. And right here I can either trail my stop in or let this run. And I decided to let it run. I really, looking back, I should have just taken it right there because you're risking so much. You can see it comes back down. And here is where it really starts to mess with my psychology a lot. Thinking, did you do the wrong thing? Did you do the right thing? Are you going to go on tilt, blow the whole account right before you get the payout now? Things like that. I don't like to think those thoughts. So that's why I normally just take the 200 and leave. You can see it's coming down, but it comes back up and it consolidates. And big buyers step in. Huge buyers. I mean, look at that buy volume on the bottom. Big spike in buy volume. So I'm going to trail this up so I can get my $200 or my win. So I cannot lose now. And it comes down and it taps me out. And we get about $212 on the day. And we made it. You know, we got 2 accounts copy traded. For whatever reason, I requested the payout and it didn't show the copy trade thing, but I clicked on both of them to show it. There's $2,671. We've got an average winner of $500, an average loser of $288. You can see all the stats here. The best trade was $1,200. The worst trade was $595. Can see how long I hold them there. Usually my trades are kind of quick. There's the calendar. We had 2 rough days, but we got the payout of about $2,600. And if you made it this far, I really appreciate it. And I would really appreciate if you guys would like and subscribe, because I want to make more content like this. I want to show traders what real trading is, what live trading is. And I appreciate you so much. Hope you have a good one.